to Invest, a series on impact investing. Tonight, we'll be talking about investing in low carbon strategies. Transportation leads on CO2 emissions in the US with about 29% of total emissions. However, electricity, industry, commercial, and residential real estate are runners up, largely in part because they depend on fossil fuels to power vehicles, to power construction, to extract resources, to run plants and businesses and heat up properties. So, David, what trends do you see since the fossil fuel industry is so responsible in some ways for the emissions? What do you see in terms of U.S. renewable trends that may be shifting the needle away from fossil fuels towards more renewable investments at scale?
In my mind, I don't think it's a question of of whether we're going to have renewable energy as part of the energy generation mix or not. It's just about how fast the penetration gets in there. I think that we have passed the point whether renewable energy is going to be there or not. We can have all the roadblocks that they can put us in front of us, but the reality is that this is way too big of a market. It is been proven that it works, and not only works, but from the economic standpoint, we can compete with any other generation, conventional energy or not. So it's just as a question of how big the penetration and how fast the penetration is going to be, and not a question of whether we're going to have the renewable energy in our lives. The tendency and the trend that we've seen over the last 4 to 5 years is tremendous growth in the mid market and the C&I. Community solar and things of that nature within the solar market. It's a very safe investment within the renewable energy mix. If you think about all the resources, wind or hydro, whatnot, they have more volatility than solar.
Very interesting. Thank you, David. Luis, you and David are longtime colleagues in the renewable space and have just had many discussions about renewables and distributed energy. Can you talk a little bit, with transportation being number one in CO2 emissions, can you talk a little bit about what trends you're seeing in eMobility, distributed energy, and the relationship to the low carbon transition?
Okay, thank you. Yes, well, first of all, what is distributed energy resources? I guess in this middle market or C&I, it's basically what we see is the combination of assets that can produce, manage, and store energy at the point of consumption. That's basically what distributed energy resources, commonly known as DER. According to Navigant, in 2017, investments in that sector were as high as investment in the centralized generation, so as deep as that, and it's supposed to be growing very fast, and that's why we like this sector for the coming future, especially going into 2030. The reason that this is happening, in my opinion, is because of three things mainly. One is that renewables and solar make it happen fast. And as David was saying, the technology risk has gone down dramatically. Second is digitalization of assets and the integration with the smart grids and energy sector and coupled with legislation that allows that to happen. And the third thing is electrification of transportation. The electrification of transportation, it's the link to eMobility. This is a very, very good way to go carbon neutral very fast for companies and at a local level.